Just got my first paycheck, congrats! Now you can afford to come out with us on our expensive nights out. Thanks, but I'm actually gonna save it. Ooh, you trying to buy a new car or something? Nah, I'm saving it to buy my first rental property. Aren't you a little young to be thinking about buying that? If I start saving now, I'll be able to forward in about a year or two. That's gonna be a long time. Is it even worth it? Absolutely. After all, real estate is the ideal investment. Tell me more. I've been investing in real estate for over 7 years. I can confidently say that real estate is the ideal investment. Now I know that you might be thinking, Sean, isn't real estate for really wealthy people only? Well, no, because real estate can be for anybody. Real estate has enabled me to go from working at a full-time job that I absolutely hated to living a lifestyle where I don't need to work a 9-to-5 job anymore, while also helping me become a multi-millionaire despite coming from humble beginnings. So don't let the misconception that real estate is only for the wealthy hold you back from achieving financial freedom, because almost anyone can get into real estate as long as you're preparing for it and starting as early as you can. And unlike other investment vehicles like stocks and cryptocurrencies, real estate offers many unique benefits. So in today's video, I'm going to explain why real estate is the ideal investment. So I stands for income. Warren Buffett once said that if you don't find a way to make money while you sleep, you're going to work until you die. In a typical job, you only get paid for the time that you're actually spending at work. But if you're not there, then you don't get paid. Most companies only give you a certain amount of vacation and sick days per year before they just stop paying you anymore. Whereas with real estate, you're making money every single month whether you work in the business or not. You get income through the tenants that pay you every month while your property managers handle the day-to-day operations, making sure that the property is occupied and making sure that their tenants are happy. So as an example, let's say that you own 5 rental properties that each generate you $400 a month in net passive income. So that ends up being $2,000 a month. Then one day something happens and you get fired and stop receiving income anymore. While this would normally be a devastating event for most people, in your case, you'll be able to thrive and survive because your properties will continue to pay you $2,000 a month. As a personal example of this, in 2020 when the pandemic was in full swing, I was actually furloughed from my full-time job, which meant that I was still employed but I wasn't getting paid anymore. Normally, this would have been a very stressful situation, and the loss of income could have meant that I wouldn't have enough money to pay for my mortgages or pay for my food. But luckily for me, I had a sizable rental portfolio already, and the income that was generated from the portfolio enabled me to sustain my lifestyle until things settled down and I was able to work again. So the consistent passive income that we get from rental properties is a very important reason why real estate investing is amazing. Now, the second reason why real estate investing is great is because of depreciation. Depreciation sounds like a bad thing, right? Like it sounds like your properties are losing value. But as we know, real estate generally appreciates in value over time. What depreciation does, it actually allows us to write off a portion of the property's value every single year as a tax write-off. So that means that if you're making income from the rentals of your property, then you can actually wash it out with the passive loss that you get from depreciation every single year. And the way this works is that the government tells us that the structure of our rental properties only have a lifetime of 27.5 years. After that time, it's basically worthless. So therefore, we're allowed to write off 1 out of 27.5 of the property's value every single year. To make some numbers easy, let's say that we bought a property for $400,000, with the land value being worth $125,000 and the actual house being worth $275,000. Then every single year, you get to write off 1 out of 27.5 of the $275,000 that the house is worth, which ends up being $10,000 a year. So let's say that you're netting $15,000 from this one property after paying for the property manager expenses, mortgage insurance, etc. from the property. You can then subtract the $10,000 depreciation from your net income of $15,000 and only be taxed on $5,000, which ends up being around $1,500, depending on what your tax bracket is, which is a huge difference compared to paying around $5,000 if you had to pay taxes on the entire $15,000. Depreciation helps you pay less taxes and is a huge benefit to owning real estate. Now, the next benefit is equity buildup. Equity is the difference between the value of the property and the amount that you owe on the mortgage. By owning real estate, you gain equity in 2 ways. The first is through the property appreciating and growing over time. The second thing is through the debt pay down. So again, as an example, let's say you bought a property for $400,000 and you got a mortgage for $320,000. In this case, your equity is the difference between the two, and so you have $80,000 in equity. But as time goes on, your property may increase in value to, let's say, $500,000. Now, you still may owe the bank $320,000 on the mortgage, but your equity has now grown to $180,000 because you get to keep all the gains from the property. And as you hold on to the property, you're naturally going to start paying down the mortgage over time. And after 30 years or so, your mortgage will go down to $0 and you will have gained that equity. Again, the beauty of this is that for most real estate investors, you as a landlord are not actually paying for the mortgage. Your tenant is, because the tenant is paying you and a large chunk of that rent goes towards paying the mortgage. So then over time, you have an asset that's growing in value and all of the debt is going down. So you're getting more and more equity over time. Then letter A is for appreciation. We kind of went over appreciation on the last point, but there are two types of appreciation that work in your favor with real estate. First one is a natural appreciation that occurs as the neighborhoods start getting better, people with higher incomes move in, and more demand is created for your property. And the second kind of appreciation is something called forced appreciation. With a typical property, the way that you force appreciation is by buying a property that's heavily distressed. That means that this is something that is old, it needs a lot of work, and maybe outdated, and then you go in and fix it and make it completely beautiful. Once that's done, your property is going to be worth a lot more than what you bought it for. And the last big benefit of real estate investing is L. Leverage. The beauty of real estate is that it's one of the assets that you can easily buy using other people's money. Now, as a counterexample, let's say you want to invest in stocks. If you want to buy $10,000 worth of Apple shares, then you're typically going to be the one that has to put in $10,000 yourself. But with real estate, it's very common to put down as little as 20% for most investment properties, while a large institution like a bank or private money lender will come in to fund the other 80%. But the benefit is you get to keep 100% of the gains. And there are actually two types of leverage that you can use with real estate. The first is leveraging other people's money, like I mentioned earlier, where you put on a small down payment while another financial institution comes in with the rest of the funds. The other type of leverage is time. Real estate is a team effort, and you're not expected to do everything yourself. I can leverage my contractor's experience to renovate my properties with a better quality of work than I could. I can leverage professional property managers to take care of my properties instead of me having to talk to all the tenants, collecting all the rents, dealing with all these maintenance requests. All this leverage basically allows me as a real estate investor to scale. I'm able to do more things and take on more projects because I can outsource my time and money to other people. But one more thing that you need to realize is that leverage can be a double-edged sword. Now, it can be great for you, or it can actually hurt you very badly if you're using it inappropriately. So just be careful when you're taking on too much leverage and make sure that you're growing at a reasonable pace without burning yourself out, because you really don't want to be caught in a bad situation. By properly using leverage, you can increase your returns and build wealth more quickly than you could if you only relied on just your own savings. So real estate investing is the ideal investment to get rich. You get income, depreciation, equity buildup, appreciation, and leverage. And I don't think there's any other investment out there that gives you all these at once. But most importantly, the beauty of real estate investing is that it doesn't take a real genius to get into it. You just have to understand the fundamentals and have the mindset that you will be growing your wealth over time. If you do, it can lead you to some amazing places, such as being able to leave your full-time job, being able to become a multi-millionaire by the time you're 30 years old, and giving you an excuse to travel all around the world to visit your properties. Now, if you guys are interested in learning more about real estate, my wife and I do host a free masterclass that goes over the fundamentals of buying your first rental property, which you can check out with the link down below. Thank you all so much for watching. I appreciate you, and I'll see you next time. Take care.